Good morning, everyone. My name is Roberto Portillo, as Dr. Nicholson said, and today I'm going to be presenting my research for my economics class of this semester, Luxury and the Risk, the economics behind luxury watch purchases. So I want to ask you to take a look at this picture. As we can see, we have three Rolex watches. Rolex is one of the most known watches brands out there. So take a look at the price. The Submarine Hulk had a pre-pandemic price of $90,000. Then we have a pandemic peak price of $26,000, and then it goes down to $22,000. Then we have the Daytona Panda, one of the most known watches out there in the market. The pre-pandemic price is $20,000. The pandemic peak is $35,000. And then we have a post-pandemic price of $33,000. And finally, the special edition GMT Master 2 Pepsi had a price of $17,000. Then it went up a lot to $35,000 and went down again to $19,000. As we can see, there's a pattern here of prices going up, and then collapsing afterwards. As we can see on the graph of the luxury watch price index, is following the graph. Prior to the pandemic, the market is increasing. Then we have a pandemic peak, and then it collapsed afterwards. This behavior attracted the attention of multiple researchers and analysts, and also led me to my research question. What are the primary economic drivers of purchasing patterns in luxury watches in the United States since 2017? To give you a little bit of feedback of my research, let me tell you the angle I decided to take to perform this research, and also explain a little bit of them. To begin with, the use of gold. I used these three previous studies on the use of gold as a financial risk hedge, and on the investment of gold as an alternative investment. So all three studies found out that gold acts as a safe haven towards economic instability. They also find out that the increased demand for gold is higher when the market is not good or where inflation is higher, like the COVID-19 pandemic. They also found out that gold is influenced by other financial assets like oil, crude oil, cryptocurrency bond stocks. It's a market that is influenced by other markets as well. Gold also has a positive correlation with the US dollar price, and it's usually used during economic uncertainty to have an investment backup, as we could say. On the other hand, we have consumer sentiment. If you don't know what consumer sentiment is, this is simply how people feel regarding the current situation of the economy. The Consumer Sentiment Index studies that I use says that the sentiment effect is stronger during economic downturns. The economic downturns shift away people from buying expensive items, and that the long-run spending patterns are dominated by income and employment. So these things are the ones that mainly affect the consumer sentiment and how people feel regarding the economy of the country, or in this case, the world. Moving on with my methodology, I use a multivariable linear regression. A multivariable linear regression is an economic and statistical method or equation used to analyze the behavior of two different variables and how they react to each other. So in this case, my dependent variable is the luxury watch prices, because my main hypothesis was that people will buy these watches based on their price. The independent variables are gold prices, because most of these watches are produced with gold. Inflation rate, because during pandemic, the inflation rate, of course, was higher, not only in the United States, but around the world. The exchange rate between United States dollars and euros, because most of these watches are produced in European nations like Switzerland, and then they're exporting to the United States, and you can buy them using dollars. The disposable personal income is basically how much money people have to spend on whatever they want to buy. Unemployment rate. This is pretty simple. People were not working during the pandemic, or at least most of them. The retail sales of watches is a market that also increased during the pandemic, meaning that people were buying cheap watches at the same time they were buying expensive watches. And the consumer sentiment index, as I previously explained, is simply how people feel regarding the economy. In economics, it's very important to know where all the data is coming from, because this is how reliable our research could be. So my main source of data are the Bureau of Labor Statistics, or BLS as we call it. This is simply a government agency that provides monthly updates regarding the economy, how the situation is going, consumer price index, producer price index in general. FRED is the Federal Reserve of Bank St. Louis. This is a private website that brings together all the information out there from government agencies and make it available to people in a simpler format. Yahoo Finance provided me with information regarding stock, the stock market, bonds, etc. This is simply the finance department of the Yahoo company. And lastly, I have WatchChart. WatchChart is one of the most reliable sources to obtain information regarding luxury watches. The data range of my research goes from 2017 to 2025, and I made a total of 96 observations. One limitation I had is obtaining the information of the market of luxury watches through WatchChart is really difficult if you don't have the subscription, so I had to go around that a little bit. I had to pay. So moving on to my results. As we can see, I'm going to be focusing on gold prices and consumer sentiment index. So as we can see, the coefficients of my result are low or negative, meaning that the correlation between the prices of luxury watches and the dependent variables are not that strong. But I'm going to be explaining the actual results moving on. As we can see, all the highlight ones are the ones that are reliable, or inflation and USD euros are not that reliable. So let's move on to my results. So the first part, gold. Gold and consumer luxury watches are often discussed together as alternative assets. So it was common to expect a strong correlation between these two variables. But according to my results and to the previous literature, gold acts as a safe haven against inflation or economic instability, while luxury watches are part consumption good, part investment. And their demand is driven more by culture, taste, scarcity, and not really on how the economy or the market is behaving. Luxury watches has a brand-based pricing. Like Rolex or Patek Philippe, their price is based on their brand, and the price of gold is not really influencing the change on the price. We could say that gold is used as a financial hedge against inflation, but the relationship between these two variables is not strong enough to say that gold is shifting the price or moving people to buy more or less luxury watches. The Consumer Sentiment Index. My main hypothesis was that the Consumer Sentiment Index will be higher during pandemic, especially in this market, because people will move away from purchasing like big-ticket items or expensive items because of the situation of the economy. Well, in reality, the Consumer Sentiment Index only measures middle and low-income individuals, and not high-net-worth individuals or rich people, who are the main consumers or purchasers of these items. The university that takes or that leads the survey for the Consumer Sentiment Index is the University of Michigan, and they only measure the income of middle and low income individuals and how they react to the economy, but they don't measure the psychology behind why people are buying the watches. Why are they buying the watches, and why are they investing more money during economic recessions? So what conclusion can be drawn out of my results? Any of the variables that I analyzed didn't have a direct impact on the price and the consumption of these items. But in reality, during the COVID-19 pandemic, the Federal Reserve of the United States and central banks internationally increased the interest rate. They lowered the interest rate so people have more money to spend. Because we were in quarantine, people had limited options, so they moved on to online purchases, spending their money on luxury watches. Also, we were not producing, because all the factories were shut down, enough watches, so all the prices went up, and there was a lot of scarcity. After the pandemic, we had an economic recovery. All the interest rate went back up, all the production was normal again, and all of those overpriced watches that people had lost their value, and they lost their money. So the main economic drivers of this behavior in the market was simply interest rate, personal savings, and scarcity. For my future research, as we know, Bitcoin and AI are everywhere now and are influencing the purchasing behavior of consumers. So I would like to analyze how AI suggestions online are shifting the behavior of consumers and how cryptocurrency payments are also moving people to a more online version of purchasing. And I would like to study how the behavior has changed throughout the years, especially after the economic recovery of 2023. These are my references. This is my regression, and thank you so much.